Okay, when we are doing this, see what is the commercial loans they have said. If there is, see if they are giving, see very simple one. If the actual loan is going to be 6% and we are getting a loan of the 4%, then we have to take the subsidized, and you have to take into consideration official rate of interest. Okay, official rate of interest. There is an exemption for loans made to employees on commercial terms by employees who lend to the general public. Example with respect to the banks. Okay, banks. Is it? See again, is it is rarely tested, rarely, but we cannot take the chance. Rarely tested, we cannot take the chance. The exemption applies. The loans are made by the employer whose business includes lending. Finance companies. If finance companies give loan to the employees, then it is applicable. Loans are made to the employees on the same terms and conditions. As it is going for the public, you have to give that on the same terms and conditions to the employees. A substantial number of loans on these terms are made to the public. Made to the public customers means the public should be majority. Okay, the public should be majority. Means you should not focus only on employees. Is that very simple? It should be more than 51% to the public. Okay, less than is not even, I cannot say it is less than 49%. It is a marginal, subject to employees, as simple as that. Is that subject to employees? If that is the case, then the exemptions will apply. Exemptions for commercial loans. Rarely tested, is it right? Now, assets provided to employees. Private use of assets provided by the employer. The general rule that applies to the provision of assets. What are the assets other than cars, vans, and accommodation? Because we already covered this. We already covered cars, we already covered vans and accommodation. Any other thing apart from this is that an employee is taxed on an annual benefit. How we are going to tax it? 20% of the asset market value. Any other asset except car, van and accommodation, any other asset, it will be taxed 20% of the market value. What is the market value when the employer rents the assets available to the employee instead of buying? Is it right? The employee is taxed at a higher of. Is it when the employee rents the asset made available to the employee. Conditions are very, very micro. The employer will rent and made available to the employee. Then which one we have to take? Whether it is whichever is higher. Whether the rental value is higher, we have to take that. Whether it is a market value is higher, we have to take that. Is that we have to take? Means when the employer takes the assets on the rent and is provide, whichever the value is higher, we have to take. The provision of one mobile phone to the employee is an exempt benefit. However, the above rules, however, will apply to any other additional mobile phones. See, you can provide one mobile phone, that is exempted. Okay. If it is any other mobile phone, then the above rule will apply. These rules do not apply to, we have already taken cars, vans and living accommodation. Is it? Cars, van and living accommodation. Are you clear about this?
Yes, sir.
Okay. Now, Helen is provided with a computer. She is here with a computer. A small assets. It's not a big assets by her employer solely for the private use. Cost is how much? 800. Calculate the taxable benefit. The benefit is how much? They have taken 20%. Okay. The benefit is assessed each tax year in which it is provided. This will be time apportioned, means what is the months it has been given if the asset is not provided the full year. It's very straightforward. What if the employer rents the computer 200 per annum? Is that 200? What we have, rental is how much? Rental is how much? Rental is going to be 200. Okay. 20% is how much? 20% is going to be 160. What is the rule? It says how we got 160? 160 is it is 800 times 20%. Whichever is higher, they will take it. Is it okay?
Yes, sir. Yes, sir.
Okay. Now, see, small things. It will take lot of time. Gift if the employee purchase a new asset and purchasing employer new asset and gives to employees immediately, the employee is taxed on the cost to the employee. The employee is taxed. The employee is taxed on the cost to the employee. What it happens when where an asset is used by employee is where an asset is used by employee and subsequently given to that when where an asset is used by employee means you are taking the buying a computer and giving to the employee, and after that subsequently given to the employee, the taxable benefit that the employee is taxed is higher off. Is that now what will happen? In most of the cases it happens. Okay, I will give very quick example. You have automobile showrooms. Okay, they will say that we are giving to the employees, we are giving it for 4 years. And after that they'll say that there will be some amount will be there. Is that there will be some amount. You have to pay some minimum amount and you can pay the minimum amount and the employee can take over that asset. Then what is the procedure? How much it has to be taxed? Asset market value is it when gifted? Okay, when gifted market value. Asset market value when it has been first made available. When it has been made available at the beginning, all benefit taxed on the employee during that time has to be deducted. Is that whatever the benefits means we have to reduce all the benefits because already it has been taxed. Again, you should not take. The purpose is once it is taxed on the previous years, again we should not tax in the subsequent years. But did not own it, you have to deduct and you have to take the amount which is not taxed. Is it the purpose of the special gift rules for gifts of used assets is to prevent employees from gaining from gifts of assets that depreciates in values once they are used. Okay, well, the thing is, if they have given the asset, okay, they have given the asset as a gift, okay, you have to take into consideration the precise, accurate value. Is that precise, accurate value? Where the assets been given to employees is a used car, van or bicycle for journey. The above rules do not apply. Instead, the taxable benefit is always the market value at the date of transfer. Is it now what is the message they are giving? They are giving you the message that if we are giving any asset, when we are giving any asset, and that asset should be taxed based on the market value at the date of transfer. Is it okay? Read once. Okay, read slowly, read rules, slowly read once. Is it okay?
So, sir, for the gift of assets, the employer bears the tax, right?
Yes.
Okay, sir.
Where is that?
In the first line, sir.
If the employer purchase, if an employer purchase a new asset, that is the one you are asking?
Yes, sir.
If the employee purchase new asset and give it to the employee immediately, the employee is taxed on the cost to the employer. Okay, definitely you are.
Employee tax is taxed.
Okay, definitely it will not on the employee. Okay, it is not employee for the use. Okay, for the use as such. If it is a
But
private,
sir,
if it is a private, yeah, tell me.
isn't it written like employee is taxed? That is what is making confused.
Where?
The second line of that, sir,
Ha
the
ha. See,
employee
when it is
tax
for
on the cost.
private use, when it is for private use, that's what I want to continue. When it is for private use, when the asset is used by an employee and then subsequently given to that employee, the taxable benefit that the employee is taxed. Is that you see what they have mentioned here? Is that they have the same thing? You have given you have taken the car and see what you will do. You will give a car for an office purpose. This comes there only. You are giving a car for business purpose. Some subsequently what will happen? You will sell the car to the some employees will say that I will buy this car. I will buy this asset. If that is the case, when the employee is willing, private use followed by gift of the asset, private use followed by gift of means after that subsequently is that you are going to take it for a private use. What will happen then? Whatever the market value is there, on that market value, that there will be a taxable benefit will be there.
So,
20% of.
but
Pardon?
my question is the employer purchased the new asset
Hmm.
and gives to the employee.
Huh.
How is the employee taxed on it, sir? Isn't it the employer who is purchasing the asset?
Employer is purchasing. Na? See, that is the reason. When employer will purchase, okay, employer will purchase, it will be taxed on him because here we are working here we are working with the employment income. Is it right? Here we are working with the employment income. Here we are talking in terms of corporate gains. Okay, corporate taxable gains. Is it right? We have corporation tax will be there. When we are talking in terms of corporation tax, then it will come for the employee. Now we are exclusively we are discussing employment income. When it is a employment income, why this amount will be shown under the employment? Employer is purchasing. Employer is purchasing. It means it will be taxed by the employee. It is taxed on the employee. When it is going to be, when it is going to be gifted to the employee, automatically it will be shifted from here to here. When it is gifted, when it is used for a private use. If it is for a private use, then employee will be taxed. Are you understanding my point? If it is used for a private, then it will come to our head. If it is not a private use, if you are using for a business use, or employer ownership remains with the employer, ownership of the asset remains with the employer, then the picture of employee will not exist.
Understood, sir.
Okay, when there is no ownership, why? When it is a gift, that's why I say it is that's why I say somewhere it has been given very clearly. When the asset is used by the employee and subsequently given to that employee, then when it is given to the employee, then the taxable benefit that the employee is taxed. If it is not subsequently given, it will be the employer.
Yes, sir. Okay, sir.
Okay? see the thing. Just have a very detailed one. Okay, Brain employer, Brain's employer, Sex Limited purchased a dishwasher for the use 2020, costing how much? 600. Okay, costing how much? 600. On 6th April, he gave the dishwasher to Brain for how much? One. When they have purchased 1st June. Okay, 1st June 2023. He has gifted one. He has gifted on 6th April. Is it? He has gifted on 6th April 2024. For how much? For how much? 150. Is that for how much? 150. Now you see the thing. Now, when he has gifted 1st June 2023, calculate the benefit taxable on Brains for the gift dishwasher for the year 2024. Okay, 23. Okay, now see the thing. 2023. Okay, 2023. This is 2023, 24. This is 2024 and 2025. Okay, June. They have given it on June. Pro rata basis. See the thing. 600. 600 at the rate of 20% for 10 months. Are you clear about that? Already it has been taxed. Already it has been taxed. 100. We have deducted. Now, what is the taxable benefit? Taxable benefit is only 500. Is it okay?
Yes, sir.
Okay, already they have taxed here. Okay, already they have taxed here. 100. Okay, now how much they have to tax? They have to tax only. Benefit is how much? 500. That is it. The taxable benefit of 500. See, it is not here. It is not here. It is here. Now, what would be the assessable if the Brain has paid X Limited 100 for the dishwasher? Is 100 for the dishwasher. How much is the tax? What is the value of the asset? The value of the asset is how much? Taxable benefit is 500. Okay, how much is the tax? Means what? The value of the asset in simple terms. Okay. Now, how much you have paid? You have paid how much? 100. What is the taxable? You see, the value of the asset is 500. You are paying 100, and you are getting the asset, the value, the asset worth of 500. You are getting it for how much? You are getting it only for 100. Understand like this. A asset worth of 500, you are getting it by paying how much? 100. The remaining 400 is your taxable benefit.
Sir, I have a doubt, sir. We calculated, we learned about two methods, like we have to assess the higher of rental value or market value. In this, rental value will be 600 into 20% into 10 divided by 12, right?
Why it is rental value? They have taken it or rent, or they have taken it or purchased?
Purchased.
Then why rental value will come?
That's what, sir. There is like two methods which we studied, right? Higher of rental value or market value.
Okay. One second. Where is that? Is it right? See the thing. How much is this example illustration 10 is fine?
Yes, sir, that is fine.
Okay. Now see what they have said. Is that if they mention very clearly, what if the employee will rent? What if the employer will rent? Are we renting the property in the example? What we have done? They have mentioned anything on a rental basis?
No, sir.
If they have not mentioned on the rental basis, then the question will not arise.
Okay, so this 600 is completely on purchase.
Yes, they have mentioned very clearly now, purchase a dishwasher. Anyway, they have said it is on a rental basis.
No, sir.
Okay, anyway.
And the 20% is applicable on the market value of the asset purchased.
Yes, if see if it is if the initial cost is there or the market value is there.
Okay, even the original cost also.
Yes.
Okay, sir.
Okay, if we have to see if the market value is given, then we have to take the priority for the market value.
Okay, sir.
Okay. Whichever is higher or whichever is lower. I'm asking.
Higher, sir.
Yes. Okay. Now, are you clear about this?
Yes, sir.
Now, take this one. Is it? Put one. Okay, that's it. The cost were purchased. They have purchased it. How much they have purchased it? Do it in a very short term. Don't do all the procedures. They have purchased. When they have purchased, they have purchased it on 6th April. Okay, they have purchased 6th April 2023. On 6th August 2024. Okay, on 6th August. Okay, on 6th August 2024. The suit was purchased. The suit was purchased by the Habiba employee. Is it employee? Is it employee? For how much? 14 pounds. When the market value is 30. Calculate the benefit assessable on Habiba for each of the tax years. Here they have purchased for how much? 300. And here also how much is the April, May, June, July. Here also of 4 months. How much we can do? How much is there for, see how much is there for 2023, 24, 2023, 24. It will be how much? It will be how much?
300 into 20%.
300 straight away. Okay, I'm doing it in shortcut. 300 into 20%. It comes to how much? 60. Are you clear about this?
Yes, sir.
Okay, done. 2024. Yes, Samuel. 2024, 25. Okay, how much is there? How much is there? They have given it for how much? 4 months. Okay, any doubt you ask me. 4 months till August. Till August. Okay, till August. How much is there? How much is there? 300. Okay, 300 times, okay, 20% times 4 by 12. How much you will get?
Sir, 20.
20. Okay, 20. Now, okay, fine. That's okay. What is the current market value they have said? Is it? What is this? What is the current market value? Current market value is how much? Current market value is 30. Are you clear about this?
Yes, sir. Yes, sir.
Okay, current market value is 30. Now, how much? See, current market value is 30. How much is the asset? Well, see, we have to make sure that how much it has been taxed. Okay, current value. Is that original asset value is how much? Original asset value. See, I will put it very simple. Is that this is the step 1. Okay, this is the step 2. Okay, this is the step 3. This is the step 3. Okay, original asset value. Original asset value is how much? 300. Okay, 300. How much they have taxed? Minus taxed. Taxed in 2023-24. How much they have taxed? 60. Is that taxed? Okay, again in 2024-25 for 4 months. Okay, for 4 months. How much they have taxed? They have taxed 20. Okay, they have taxed 20. It comes to how much? It comes to 220. Is it there?
Yes, sir.
Okay, 220. Now, the value of the asset is 220. Is that how much he has paid? He has paid how much? He has paid by Habiba. Okay, paid by Habiba. How much? He has paid 14. Okay, he has paid 14. Means it comes to how much? 206. Yes or no?
Yes, sir.
Okay, 206. Okay, 206. Okay, 206. Now, when it is 206, is it right? What is the taxable benefit? Is it 206?
20.
How much is the taxable benefit? Is it? Is it?
6 into 20 per.
No, 206. Okay, 206. This is I will write like this is for exclusively for the this is for when it is being gifted. Okay, when it is been gifted, how much is there? It is 206. On the gift, it is 206. How much he has given for 4 months? For 4 months, he has used it. Okay, for 4 months, he have used it. How much is the 4 months? 4 months, he has used it for 20, and when it has been transferred, it is 226. It is when it has been transferred, it is 226. Total is how much? Total is it right? See the thing. Total when total accessible for 4 months. How much for 4 months? Equal to, see, I'm putting it separately. It comes to 20. Okay, when gifted, not gifted, he has purchased. When Habiba purchased, how much it is taxable benefit? 206. How much is the total benefit? 226. Are you clear about this?
So this total accessible, this thing has been already detected before itself, right?
Where?
Why did you add it?
Where?
Like for 4 months. Tax 2020.
This one?
Down.
This one?
Down. Not that. Original asset value 300 minus tax 23-24-60 minus tax 24 months 20 you have already deducted there.
Yes, 20 already. 20 already deducted. Why we have 20 already deducted? We want to know what is the value of gift as on date of purchase. Value of gift on date of purchase, as on date of purchase. Okay, value of the gift as date on purchase is 220. And okay, and we are excluding this because already we have deducted. Already he got the benefit of 20. Already that has been taxed. We want to know the value of the gift as on the date of purchase, 220. Is it clear? You are asking why we have deducted and why we have added.
Yes, sir.
Okay. See, this is separately. This is separately. This is no way related. This is for the first 4 months. This is for the first 12 months. Here we are doing calculations separately. Here we are doing calculations separately. What we are doing here, we want to know what is the value of the gift as on the date of purchase. Is that the initial value is 300. Last year they have taxed for 60. This year they have taxed for 20 for 4 months. Then after taxation, 300 minus it comes to 220. The value of the asset at the time of purchase is 220. He has paid only 14 and he got it for 206. This is the taxable benefit. This is the taxable benefit on purchase. And this is the taxable benefit for 4 months. Understand point? There are two different things. This is the taxable benefit.
This question itself, like there is a suit costing 300 was purchased by the employer of Habiba for use of Habiba. Am I right, sir? So on that is on 6th April 2023. So we will be finding 300 into 20% for the year 23-24.
Okay.
Am I right? Okay. On 6th August 2024, the suit was purchased by Habiba for 14 pounds. Is this 300 costing suit was purchased for 14 pounds, or is it a different suit which has been purchased?
How much they have purchased? Take this one. They have purchased it for 300. How much the benefit they got it? Their taxable benefit is 60. This is for 23-24.
Yes, sir.
How much is their value? Now the value is 240.
Yes, sir.
Okay, now value is what? This is for 4 months. For 4 months, how much they have charged? 20?
Yes, sir.
When they have purchased on 168, okay, 6th August. When they have purchased 6th August, 240 minus 20, it comes to 220.
Yes, sir.
And this is the value. Now, when they have purchased, how much he has paid? 14.
Yes, sir.
How much is it? Is it clear about this?
Yes.
Is it okay?
So 206 is paid by the Habiba.
This is the taxable This is the taxable benefit. This is the tax, and this is also, see how much they have paid. They have taxable benefit last year 60, taxable benefit on the use. How much is this? 20, and taxable benefit. Now, if you take it into consideration, 20, 24, 25. Okay, how much is there? 20 plus 206. How much it comes? It comes to 226.
This 20 is for 4 months or?
4 months.
Okay.
Okay, I have written 4 months.
Shouldn't we find for the rest of the months also, sir?
Which months we want?
That is 8 months up to the tax ending year.
You have purchased, my dear. Then again, why you will we will calculate for next 8 months? Done. It is there. We are not going beyond this. Here the matter will be closed. Here the matter is closed. Again, why? What is the need? Why you want to? How? Why you will calculate? When you have purchased, again you will do calculation on that. It belongs to you.
Understood, sir.
Right? It belongs to you. It doesn't belong to you. Is it okay?
Yes, sir.
Whenever you find anything, see, this is not, I'm doing it for me this is very much essential, and this is the way I will teach. I'll put a timeline. When I'm putting a timeline, you will be in a better position to understand how the things are moving.
Yes, sir.
Okay? Next. A comprehensive example, okay? A comprehensive example with all the employee benefits. Read the question first. Is it clear?
So 1 minute, sir. Yes, sir, we can continue.
Okay, yes, Samuel. Samuel, just focus here. Whatever you have missed, we are going to do this, okay? Now, salary is how
Okay,
much? Salary is how much? 30,000. Is it at where is given? 36,000. Are you clear about this?
yes, sir.
And you understand why I have done this? Are you clear about this?
Yes.
Okay,
How much, sir?
8,000. Okay, that they are giving paid 31st May thereafter. Means 2023, they will pay you in 2024. This will come in next year. Okay, 8,000. Okay, total is how much? 40. Now they say it is how much? What is the 185? See the Samuel. What is the rule? What rule is 16%? It is a petrol car or diesel car? Diesel car. It is a diesel car. Is it a car benefit? It is a diesel car. See the thing. She has the use of a company car for private purpose. List price is how much? 20,000. Running expenses including diesel paid by the company for the private and business purpose. 2,600 in a year. The diesel car which does not meet RDE RDE2 standard has CO2 is how much? 185. See, Samir, what we have to do is right. What we have to do there, we have to calculate it separately. Base, if it is a diesel car which does not meet the standard, it starts with how much? It starts with 20%. Okay, 16% will be the for the petrol cars. This is for the petrol cars, and diesel cars will be how much? Diesel cars will be 20%. This is for the first 55%. More than 55, 55 grams. It is not per. It is a gram. More than 55 grams you have to take for every 5 grams. Okay, for every 5 grams 1%. Is it? Now how much is there? 185. Already we have taken 16%. Okay, already we have reduced 16%. 185. 185 is the grams minus 55. This is the general rule. It takes little bit time to understand for you. It is not difficult at all. Okay, 185 minus 55. It comes to 130. 130 divided by 5. It comes to how much? 26. Total comes to how much? The maximum amount, in any situation, you should not go beyond 37. The maximum amount. Rajnin, explain it in your own words. What you understood? Tell me.
Sir, and regarding to which one, sir?
Percentage fuel.
Okay, sir. So it's like this. So petrol, and there is two types of situation. One is with RD2, which is applicable, and one which does not meet the RD2 standards. So with RD2, the percentages are given in the formula sheet, which is 16, and if like 1 to 54 is 1 to 50, 51 grams to 54 grams, it is 15%, and 55 above is 16%. And when it is, yes, sir. And once we look for the RD2, which does not meet the standard, that is only applicable for diesel fuel. So for that, you just need to add 4% according to it, which won't be given in the formula sheet. And whatever the percentage is, like for example, like if it exceeds, like the maximum percentage is 37%, which is applied for both of them. And if it does increase or exceed the 37%, like for example like 40 and all, we'll stick back to 37% only. That is a blanket rule which has been applied.
Okay, very good. Thank you. Okay.
Excuse me, sir.
Yeah, tell me.
So for diesel, when does it increase by 4%? I didn't understand that part.
Yeah.
So that is when RDE2 does not meet the emission rules. Like there is an CO2 emission rule which meets and which does not meet.
Which page number, dear? Which page number? Tell me quickly, if you have an idea. Here. It is there. Page number 152. It is there. See that. This is the rules, okay? 51 to 54, 15%. Meeting the RDE2 standards. And you have to add 4. You have to add 4. Okay? We have to add 4. Here. The for diesel car is 4% higher than the petrol car. Here also you are adding 4%. Here also you are adding 4. 15 plus 4, 19. 16 plus 4, 20. Now, okay, this is the first thing. Are you clear about this? We have to start with 15. Okay, we have to start with the 15. It is less than 54. If it is more than 55, we have to start with 16%. Is it? That is the reason. What we have done is 16% plus. We have 187. Okay, See the thing. I am to tell you this. If they say 186, 187, 188, 189, okay? Or I'm giving another example, 106, okay? 101, okay? 102, 103, 104, okay? If we have this type of values, we have to take the lesser to the 5, okay? Lesser to the 5 means in all the cases what we have to do, we have to take 185. We should not round it up on the higher 5, we have to round it on the lower 5, okay? Here also if they give like this, what we will do, we'll round it for 100, okay? We'll round it for 100. This is the recommended, advised and suggested as per the rule. Now they have, what they have said, they gave you 187 if I am right. Then what you will do, 185 minus 55, okay? 185 divided minus 55 divided by, for every 5%, 5 grams, for every 5 grams 1%, okay? For every 5 grams an additional 1% for added for the, from the 16 to 20 for additional 5 grams, for additional 5 grams. It comes to how much? 16%. It comes to how much if you take into consideration 130 by 5. Is it 135 5? It comes to how much? 16 plus 26. Okay, 16 plus 26. If I am right, wrong, just correct me. It comes to how much? 42%. Is it? Comes to how much? 40. We cannot take what they have said very clearly. The rules is that it is going to be maximum how much? It is going to be max. See, it is given here. It is going to be up to a maximum of 37%. Means even you are getting more, if even you are getting 38%, you should not take 38%. You have to take it how much? 37%. Even you are getting 42%, you have to take 37% only.
Okay, sir, understood. Thank you.
Okay. Are you clear about this?
Yes, sir, I understood.
Okay.
Thank you.
Yeah. Just work on this. We will cover this. So many instances will be there where we are covering this part. Okay, that is the reason they have done this. Okay, that is the reason they have. This is the car benefit how much? For 37%. Now what they have said, they have provided. They have provided the car, they have provided the fuel. Provided the car, we are taking what? This is the list price. There are some rules are there. List price, maximum he can contribute 5,000. Some rules, more rules are there. Okay, go to the working. Okay, go to the working. Is it? Go to the working. What is there? Anything is there? Just no. They're not given anything. Okay, not that much specifically. Not that much specifically. Okay, what? This is the 37%. They have taken the 37% from there. List price into 37. Maximum you are getting a benefit of 37%. Taxable benefit. Okay. Now 7,400. Car benefit. There is rule. What is the rule? Rule is they have mentioned very thing. Here what they say, they are using the company car for private purpose. If you are using the company car for private purpose, what is the maximum amount? Maximum amount is 27,800. This will be given in the, it is given on which page number it is there, Rajneen? Any idea?
On what?
27,800. Sorry to trouble you.
Which one, sir?
27,800.
I will get.
We have done somewhere. Okay. Better we have to clear.
The base figure for calculating the fuel benefit is 27,800.
Which page number?
It is there in the formula sheet.
Okay, fine. It is there. Just okay. It is there in the formula sheet. One here. 1 second. It is 1 second. It is there. Here it is there. Page number 158. Okay, the base figure. See, in addition, if the provision of a company car, some employees also have their fuel for private mileage paid by their employee. If there is this, how much is the base figure? The base figure is 27,800. Write down page number 158. Okay, page number 150. Wherever is there, for time being, I will give you the references. Okay, I will give the references so that you will not miss. Otherwise, that is the reason. If one thing is missed, we will that is the reason. This is the page number 158. Okay, with respect to 27,800 into 30%. How much you get? 10,286. Total income is how much? 61,686. Personal income is how much? 12,570. Taxable income is how much? 49,176. On this taxable income, you have the two sublays. One is 20%, one is 40%. It comes to income tax liabilities 1210. Are you clear about this? Any doubt, you ask me. Slowly take calculator and do it. Once it is over, please tell. Is it okay? What happened? Is it okay?
Yes, sir.
Okay. Can I go to the next one?
Yes, sir.
Tell me on this. 1 second. 11. Okay. 2. We will complete this and we'll close this chapter today. Okay. What is that?
Yes, sir.
Okay. What is this?
So, the first one is diesel car meeting its RDE. So we'll take 16 and this the plus, which is 149 grams, which is approximately 34 percentage. And then it is available from 6th October, so it is 6 months, 6 by 12. So 20 list price into the approx percentage, 34 percentage, that is equal to 6,800 for an year into 6 by 12, 3,400 is the car benefit. And then
slowly, dear. Just for 1 day, okay? Take care of Samuel. 1 day, okay? From tomorrow onwards, it will be there. Okay? First, the diesel car meeting RDE2 standards. 6th October. Is it 6th October? From 6th October to the 6th of 5th of April. How many months are there? How many months are there? Say 6th October, November, December, January, February, March. Yeah, how many months are there? 6 months. Slowly. Even do it slowly. Don't rush. Okay? Now, what is the list price is there? List price is how much? List price is going to be 20,000. Okay, 20,000. The emission is how much? 49 gram. 149. Means 16%. It is a diesel car or private car?
Diesel, sir. But meeting RDE start.
Meeting RDET. Okay, meeting. Where it has been given?
So diesel car meeting the RDE2 standards.
Okay. No, okay. It comes to how much? If it is meeting RDE2 standards, it comes to how much? How much you have to take? Meeting RDE2 standards means it is 16% or 20%? 16. RDE2, okay? Diesel car, is it 16% plus 145, okay? 145 divided minus 55 divided by 5. How much you will get?
So 34%.
34%. Okay, 34%. Is that car benefit? How much is the list price? Is it at list price times percentage? Okay, times percentage. How much is the list price? 20,000 times 34%. Is it right? Times 34%. Is it times 34%? Times 34% times 6 by 12. Only for 6 months. How much you will get?
So 3,400.
3,400. Okay, 3,400. Okay, next fuel benefit. Okay, what is the maximum? 27,800. Is it 27,800? 27,800, 37%, 6 by 12. See why we are giving here the a senior executive in the tax year, her employer make the following benefits. His employer is providing the benefits. Okay, his employer is providing benefits. Pay all expenses as paid. Is it? The company paid all running expenses. Means he is eligible for all running taxable benefit. Is it taxable benefit? 27,800 times 37% times 6 by 12. It comes to how much fuel benefit?
So 4726.
4726. Okay, 4726. You can add or you cannot add. Okay, you can add or is it? No. Fine. 4726. Are you okay about this? This is the car benefit. This is the we will take it in a summary. We will take this one, 3,400. Now, what is the second one they are asking us? She continued to have the use of a stereo system owned by the company 2000, 2 years ago, which is kept at her home. Which is kept at her home. Is it what is the? It is 2000. Okay. Now what they have given any market price for this?
No, sir.
Okay, 2 years. Okay, they have mentioned it for 2 years. Okay. Now she has used a stereo system. Okay, she has used the stereo system. 2 years. Okay. Now, what is the point number 2? Okay, stereo system. Stereo system. Is a stereo system. What is it? Is a fixed asset. It is an asset. Okay. How much you have to calculate? You have to calculate 20% on asset value. Okay, 20% on asset value. 2000 times 20%. It comes to how much? 400. Okay. See, simple. Now you will have a revision, a complete revision individually. They have provided television for her personal use. Berkeley has provided Lily with a television for her personal use since April 2022, when it cost 1,200. April 2024, the television was sold for how much? 225. Cost is how much? Cost in. Okay, I'm just writing very simple words. Cost in 6th April. Okay, cost in 6th April 2022. How much is there? 1,200. Is it right? Cost is. They say that they have taken it for 2 years. They have taken it for 2 years. When they have taken it for 2 years, we have to reduce the value for 2 years. We have to reduce the value for 2 years. Yeah. How we can reduce the value for 2 years?
So, sir, 1,200 into 20% is last year.
1,200 times 20%. I can put it very straightforward. Times 2 years. Are you clear about this? Okay, 20% for 2 years. It comes to how much?
Or you can put 40% also.
20% or 20%. No, we make very clear. Okay, we want to make we should not have into 20%. It comes to how much? 240. It comes to how much? 240. Okay, it comes to how much? 240. But what happened? What happened? They have sold it. They have sold it for 225. Okay, they have sold it for 225. Another one thing. What happened? 240. 240. It comes to how much? It comes to 960. It is there. No, 1 minute. Sorry. Sorry, we have not. One thing. I got it. I got it. I got it. Into 2 years. Into 2 years. Is it the same thing you have told, used to tell to me?
Yes, I sold 40% because 2 years.
No, don't do like that. Don't do like that. Don't do like that. Make it very clear. Okay. minus 2495. Okay, this is the taxable benefit. Yes, we have got how many things? We got, okay, we got 400, we got 495. Then we got 400, we got 495. Okay, this is point number 3. Point number 4 is how much? Point number 4. Okay, last you say they have provided with the interest fee loan 330,000. She paid 10,000 on the loan 30th June. The loan is not used for qualified purpose. You have two methods. Is there you have the average method, you have the precise method. Which method you will use? Tell me. Tell me. Samir, I will explain you. Okay, I will explain you. There are two ways. They have taken the two methods. Okay. We will follow the average method. Okay. We will follow the average. There are two methods. I know which topics you have missed. I will take both core of those. How much is the opening balance? Opening balance plus closing balance. Okay, opening balance plus closing balance divided by 2 into official rate. Okay. Okay, now opening balance is our very specifically. Opening balance is 30,000 plus. Okay, how much they have paid? 30 minus 10. Okay, 30 minus 10. I'm writing a little bit more in detail. Okay, official rate is how much? Official rate is 2.25%. It comes to how much? 30,000 plus 20,000 divided by 2 times 2.25. It comes to how much? Tell me. It comes to how much? It comes to 563. It is not difficult. We have to be very highly controlled paper. This is a very highly controlled paper. That's the only thing we have to make. Lily was provided a bouquet of flowers. How much? 30. How much? 30. What is the maximum? Any idea? Bouquet of flowers on a birthday gift. Interest is over now. One second, one second. They have paid something. Sorry, they have paid one. Yeah, okay, fine. Okay, one second. How much is there? No, fine. Okay. If we have taken average method, how much you got it? We got it 563. Now why it is and what we have to do? What we have to do? Whichever is less. Yes. How much interest paid? One second. How much you have paid interest? Okay. But he has provided interest free loan of 30,000 on 1st January. She paid on 30th June. The loan is not used for qualifying purpose. See, the loan is not used for qualifying purpose. is that? Are you going to use that? Are you going to use that? It is not for qualifying purpose. It is not for, see, one side we have done average method. On the other side, okay, you do precise method. Whichever is lower, we will take. Okay, whichever is lower, we will take. Okay, whichever is lower, we will take. See, what is they have taken a loan when they have taken a loan of 30,000. They have taken a loan of 30,000. When they have taken a loan for 30,000, okay, is it right? See, we have to calculate for 1 year. Okay, we have to calculate. Even they have taken a loan for on January 1st. It will start from for us. It will start from April, May, June. Is it right? It will start from the 6th April. Okay, 6th April, 3 months. Okay, 3 months. It will start for 3 by 2. Is it right? What is the rate of interest? Rate of interest is 2.25. Are you clear about this? Official rate of interest.
Yes, sir.
Okay, see, don't get confused. We have taken from April, May, June. How much is it? How much we get? One sixty nine. Okay, now, okay, this is for 3 months. And after 3 months, how much they have repaid? They have repaid 30,000 minus 10,000. They have repaid. How much it is amount? 20,000. This is from July to March. This is for July to March. 9 by 12. 9 by 12 into 2.25. How much will get? Total is how much? 77050. Whichever is less. How much is the less? 507. Are you clear about this? Okay. Samuel, just keep understanding. I'm here to when we, if you have anything, just refer the videos. It is completely given. Okay. Refer exclusively chapter 5. Exclusively chapter 5. Okay, fine. Anything else? Okay, now. Are you clear about this? How much you have to take? See, whatever I am highlighting, those items you have to take. Okay, now point number 5. Okay, point number 5. Okay, what is the point number 5? They are given the okay. Birthday gift. How much is the maximum exemption? Yes. Is it birthday gift? Okay, birthday gift. Birthday gift. How much is the gift? How much is the maximum exemption? Okay, maximum exemption. Is it how much? 50. Yes, here in this case it will become how much? 0. Is it how much? Are you clear about this? In addition, she offered the choice of lunch on vouchers 2 per day, 200 days, or free meals, 1 per day in the company canteen. Meals are available free of cost, charged to all employees. It is not exemption as well. Tax benefit is lost. It is exempted or not exempted for all employees. Exempted for all employees. Is it that it is if it is for excluded some employees, it is taxable. But we are talking about subsidized lunch for all employees. It is exempted. Point number 6. Okay, lunch on expenses. Lunch on expenses for all employees. See, this is where your task will be easy. The more we will have a discussion here, the more the revision will be easy. The expenses for all employees are exempted. There is a limit is there. Check. There is a limit is there. Okay. We will cover this. Okay. We will cover this. It is how much is there. See, she was offered the choice of lunch and was 2 per day for 24 or for meals worth 3 per day in the campaign for 20 to 100 hours. 200 working days. Okay, 200 working days. You have, if you take the vouchers, if you take the vouchers, lunch on vouchers, lunch on vouchers, how much is there? 2 into 200. Is it 2 into 200? It comes to how much? 400. Or he can, for free meals worth 3 per day. Okay, you can have the free meals. You can have the free meals. Okay, we have the free meals. Free meals is how much? 3 times is it 200. See, it is how much? It is 600. See, if it is a free meals, okay, free meals, check. Some condition is there on the vouchers. Okay, some conditions are there on the vouchers. Okay, some conditions. If she is opting for free Accepted now.
Because the vouchers go into 200, that 400 is taxable, right?
She has to take any one now, my dear. She has to take any one or.
Yes, sir. So in that case also, the meals are available to all other employees. So that is exempted. Vouchers will be taxable, right?
She has to take any one. Either she can take vouchers or she can take free meals. Choice. She was offered a choice.
Okay.
She has offered a choice. She has to take any one. Definitely, she will take which is exempted. She will not take which is taxable. What is the total? Nine five two. Are you clear about this? Okay. Should be 2